Hey, welcome to the Invest in Value channel. I'm Victor, and I wanted to cover the CPI report that was released this morning. It is a fun year to be an investor, and it's great to see inflation go down. And that's what the report revealed. I wanted to go over the report and describe the ramifications and the change in the stock market and the bond market that I expect and share with you my planning, my investment planning for both stocks and bonds for the remainder of 2023. So if you recall, in 2022, inflation was in the nines, like 9.4, and boy, that was huge. It was almost 10%. So if you imagine prices of goods were going up 10% year over year, which is a lot and really tough on consumers. Well, today we saw the inflation month over month come in at 0.2. So 0.2 times 12, that'd be 2.4% inflation. That's pretty good. The consensus, the market was expecting 0.3%. So it was a nice beat. So very, very good. Inflation year over year is at 3. Very good. It beat the consensus expectation as well as the forecast that we expected. So just a really good report overall. The core inflation that's been really sticky is also going down. It came in at 4.8 when the consensus was 5%. And the core inflation month over month, 0.2, very good. It also beat. So across the board, it was a beat on the consumer price index. And this affects interest rates and it affects the stock market. Let me get into that. It is a fun year to be an investor because year to date, the S&P is up almost 17%. The NASDAQ is well above 30%. So big cap stocks are just flying and it's great. It's fun. It's great to own Meta, Alphabet. It's great to own Uber, Netflix. Those stocks have just been running, which has been great. And with this new CPI report, I think the stocks are going to continue to run, especially stocks that didn't fully participate in the run that we've had so far. And I'm thinking about smaller stocks that are less known, that have very good growth, are profitable, generate free cash. There are stocks out there, and I think those stocks are going to run. I also think that value, safety stocks are going to begin to run. I think they pay good dividends. They're good stocks, really good blue chip stocks is what I'm thinking. Those are also going to be on my buy list. Looking at the stock market over a 5-year timeline, we've been through a lot from the very low point of 2022 to now. As mentioned, stocks are up well over 20% in that time frame. So it's been a really good rise for the stock market. And I think that we can get back to these levels. And I don't know if that's another 10% on top of where we're at, but it might take a while to get there. It might take till the end of the year, maybe even going into 2024. And the reason for it is it's been a terrific run. So will investors take profits? I have certainly taken some profits. I've sold 4 positions in the last 2 days. And you know what? It's been a great year. I want to bank some of those profits and stick them in my pocket. And if they rise a little bit more, so be it. But I'd hate for the market to start coming down, and I didn't take some of my profits. Switching my attention to interest rates, I'm looking at the 10-year Treasury. And if you can see that over the last month, interest rates went up a lot at the beginning of July, and they went up substantially. And they pretty much came down substantially today with the CPI report showing that inflation is coming down. The need for high interest rates is probably going to go away. And the Federal Reserve will probably have to tend to this recession that was supposed to be happening and begin to lower rates. Maybe as soon as the end of this year or at the beginning of next year, you might see interest rate reductions. So the market is expecting that, and interest rates really dropped. Looking at a longer term horizon, here's the 10-year Treasury over 5 years. And you can see that, 5 years ago, we were around 3%. It really dropped. Going into 2019, it was dropping. And then we had COVID, and artificially, the government had to really reduce interest rates so that we would keep the economy going while we were in lockdowns. Totally understandable. I get that we had to do that. And then in 2022 began the big rise, just a huge rise in interest rates that caused a couple banks to collapse, and it caused very high interest rates. So, it's interesting how far we've been, both down and up. And this is going to affect, I think bond prices are going to start going up because the yields are going down. So it has an adverse effect. As yields go down, bond prices go up. So it's good. I've been building up a stock bond portfolio for really about a year and a half now. And over time, I've bought into really good quality corporate bonds as well as 3 ETFs. If you look at my channel, I reviewed those stocks, those bonds, and you can take a look at those. So it's good to have a good portfolio of bonds. They're beginning to rise in value, and I'm getting a 6 to 11% yield on those bonds. So it's great to have that type of yield from that portfolio. All right, let me share some conclusions of what I'm seeing with the CPI report, where interest rates are going, and what I plan to do with my investments for the remainder of the year. So interest rates are high, but I only expect the Federal Reserve is going to increase one more time. And that's just strictly because they want to protect their credibility. They said they were going to hike one more time, so they're going to do it for credibility purposes. But after that, if anything, I expect interest rates will begin to drop even before that rate increase, because the market knows what's coming. Bond yields are high and bond prices are rising. So it'll be fun to have a good portfolio of bonds. It's not too late to buy bonds and watch those bond values rise. As interest rates drop, bond prices will go up. So it'll be fun to both get great income out of a bond and see it appreciate over time. The stock market, the S&P and the NASDAQ are on terrific runs, and I think it's going to continue. Not quite as dramatic as we've seen the last 2 months. I would love for that to happen, but let's just be realistic. Stocks, are just really, really priced high. If you look at Microsoft, you look at Apple, you look at Meta, these stocks are just priced fairly, I would say, but there's very few discounts out there. So my expectations for the remainder of the year, inflation's going down, and with it, so are interest rates. So with lower interest rates, that means that stock valuations are going to go up and bond prices are going to go up, as mentioned. So that's my expectation for the remainder of the year. Large cap stocks are fairly priced, but boy, there's not a lot of really good deals out there for stocks. So I got to look elsewhere to find better stocks. Defensive stocks, they've been kind of, being left behind, and I think they're going to start to recover. A good blue chip, defensive stocks, I'm going to start buying more shares in those types of stocks because I think it's a safe bet, especially since the stock market's so high at this time. And I'm going to be looking there for some investing opportunities. My plan for the remainder of the year is buy more bonds and pick good bonds to buy, corporate bonds. I'm even buying, BBB rated bonds, which have a very good yield. And now with interest rates dropping, those yields look great. I'm earning 11% on one of my corporate bonds, which is phenomenal. And I'm expecting that bond's going to rise in value. Buy defensive stocks, especially some blue chips, just start buying bonds that pay stocks, buy stocks that are defensive, blue chip stocks that pay a nice dividend. And I expect will rise over the next 2 years. And look for smaller companies that haven't participated in the big rise with the stock market going up so much. I think one of the stories within the stock market we're in is the large cap, especially the technology large cap stocks, have really taken a lion's share of the appreciation. And I think those stocks are either fairly priced, maybe even overpriced. There's not a lot of value to be had in big cap stocks, but I think the smaller stocks may provide a few good opportunities. And that is my CPI report. Thank you so much for watching. Good luck investing in 2023.